have a very special guest with us. His name is Somasundaram PR. He is Managing Director, World Gold Council, India. Welcome to Tika TV, sir. Sir, first of all, I want to ask you that we have seen the trends in Q1 and the upcoming Q2 is coming up. So I want you to explain how was Q1 and how do we predict the expectations in Q2?
Yeah. So Q2, which is for the calendar year's June quarter,
Yes,
we
sir.
saw a demand of 187 tons in India. Let's look at India figures first. Q1 was 151 tons. So compared with Q1,
Yes,
Q2 is higher volume.
Okay.
But that's how it traditionally works, because Q2 you have this Akshay Tritiya, which
Yes,
is a
sir.
very important gold buying occasion in
Indian market,
in the
basically.
Indian market. And we had a very good Akshay Tritiya this
Last
year. This year in the quarter 2, so we ended up with 187.
Okay.
However, as compared with the last year's same quarter, we see that this demand is about 8% down, because last year Q2 was 202 tons, and last year Q1 was again 160 tons. So if you see, both the quarters have been slightly below the previous 2 quarters.
Okay.
So overall, if you really look at the first half, it is 339 tons, which is against last year's 360 tons.
Okay.
So in a sense, yes, the demand has actually been muted, we would say. There are specific reasons for it. We have explained it. As I said, one of the key reasons is that during this quarter, while the international price dropped significantly, 5.5%, Indian consumers could not get the benefit of the drop, because they saw, because of rupee depreciation, 8% increase in the domestic price. Now that, if you really see, therefore, the movement is around, the gradient is minus 5.5 and plus 8. So that's about 13% is the differential that you saw. That is one reason for it. And Indian consumers do look for short-term price drops to buy. So when there is such a sharp rise, they do tend to wait and watch. The second reason that you saw is post Akshay Tritiya, we had this intervening inauspicious month, which we believe comes once in 3 years, Adhik Mas. So that also actually curtailed buying. People don't buy gold in that period, and the trade tells us that that is also one of the reasons why the demand has been muted.
Okay, sir. So the second question I wanted to ask is, the global war is going on between India, the US and China. So how it is going to affect the Indian market as well as the global market both?
You see, normally when gold is such an asset class that it behaves very differently from the mainstream financial asset classes. So when equities does well, it is a general expectation that gold will remain very, very muted in the sense, because it is inversely correlated with both dollar and most asset classes, although it's a commodity. And that's the beauty of gold. It's an insurance. When everything works well, gold need not work. When everything there is a problem anywhere else, gold works very well to improve your portfolio. In the case of the recent developments, trade war is one of the geopolitical development that has happened. Earlier to that, you saw the Korean crisis, and prior to that, there were lots of things. The Middle East, various things, the Syrian war and
Iran
things like that.
sanctions
Yes. Of late, what we have seen is, yes, the gold, the recent development has done is led to currency weaknesses, and we saw it in various markets. So while the US strengthened, and therefore US price of gold dropped in gold, many markets did not see it, whether it be small markets like Iran and India, big market like India. Even in China, the RMB actually depreciated significantly. So what it has actually led to is a rise in the investment gold demand, which is bars and coins and ETFs. You saw inflows into the gold ETFs in Europe rise significantly in this quarter. So, and that's not directly related to the trade war, but what it happens is that the developments around the political and geopolitical scenario do tend to make consumers move to gold. And it was, I wouldn't say very pronounced, but it was very pronounced in some geographies. It was not so in some other geographies.
Okay. So talking about China, sir, we have seen the Chinese currency is becoming weak. It's almost about 15% weak as compared to USD previously. So, and China being the largest consumer of gold. So, how do you think how it is affecting the international or the global gold market?
You see, China is a very big consumer of gold. It's also a very big producer of gold.
Yes,
As
sir.
you know, it's about 900 to 1,000 tons is the Chinese market. Shanghai Gold Exchange has huge volumes. In fact, it is now. It will probably be the one of the. It will be the largest spot market. The way it has affected is the Chinese demand has gone up in this quarter. While jewelry demand was up 5%, we saw the demand for bars and coins in China rise by 11%. And this is a very typical behavior we have seen. So, whenever there is a currency weakness and whenever the stock market actually performs in, does not perform well and it performs poorly, you see people tend to move to gold. And that's exactly what we saw in China. So, you saw a huge spike in the demand for bars and coins. And of course, jewelry had a very good run too with 5% growth. So, overall, you saw the Chinese market, the Chinese consumers moving to gold in this quarter. And primarily, it is driven by the RMB weakness and the performance of the stock market.
Okay. So, for domestic prices in India, the interest rates are being raised again and again. And recently, we saw yesterday RBI increased it by 25 basis points. So, how do you think how it's going to affect the Indian market, the rise in interest rates in India?
You see, in India, interest rate rise is linked more to inflation than to anything else, you know. So, and we have seen it in the past. Now, this is an action by RBI, possibly taking into account various factors, including the oil price, the deficit, and the demand for loans, all that stuff. And they do believe that 25 is not going to affect the demand for loans very much, but it is necessary to make sure that the rupee depreciation, there is macro balance in this. Let's put it. So, in a sense, will it directly impact gold demand? No. Because what it will do to currency is more important for gold than what it will do directly to gold itself. Even internationally, we have seen that Fed has increased prices several times in the past, and the relationship between interest rates and gold, even in international media, we have seen is not as impactful as it used to be in the past. There are several other factors which affect gold price and gold demand. So, I wouldn't think that this 25 basis increase in price, which makes the cost of holding gold in a sense go up, the theoretical cost of gold hold, will have any impact in the Indian gold demand.
Okay. Sir, you were also talking about the marking of the gold, so that the purity test and other things. So, how do you think how it's going to, what are the channel or what is the blueprint you people are making or you people are planning to make, which will again have a purity check in India, which is very low right now?
Yes.
So
we have said that India has a challenge when it comes to hallmarking. Government has made mandatory hallmarking. The law for mandatory hallmarking has already been passed. Now it is awaiting enforcement. The Bureau of Indian Standards and the Trade and the Indian Hallmarking Association and the Jewellers Council, they are all working with the government to make this a reality. It is important for us to also signal to the world, just like how other big markets have done, that India is second to none when it comes to quality. See, there is no doubt in the minds of anybody in the world about the Indian craftsmanship, etc. But when you really do a survey, there is always the same degree of confidence is not expressed about the quality of gold in India. And it is up to us as Indian trade to stand up and say that hallmarking is mandatory and Indian consumers get the same quality as any consumer in the US or Middle East or China gets it. So we have given a roadmap. We have suggested. We are always working with the trade to make this a reality. Our wish is that this mandatory hallmarking is brought in, and with a very clear roadmap over the next 2 years, so that the industry can adapt to it. And as I understand from various discussions, the industry has the same view too. They just don't want it to be thrust on them at a time when demand is already low and industry is going through a lot of transition. A mandatory hallmarking law and enforcement which makes the demand go down further. So it has got to be handled in a manner that it is over a period of 1.5-2 years.
Okay, so with time, the purity check needs to be
Exactly.
made like assured to the consumers as well.
That is right, absolutely. Yeah.
Thank you so much for talking to Ticker TV, sir.
Thank you.